Welcome back. It is time now for your Sunday Money. Brokerage giant Charles Schwab Company may have just changed access to the stock market forever. It announced that it's eliminating all trading commissions on stocks and exchange-traded funds, also known as ETFs. Is this good as it sounds for your money? Well, good news. We have our money man, certified financial planner Paul Fain, to kind of break this down and explain it. This sounds good.
Yeah.
Is it as good as it sounds?
This is good, Leslie. Charles Schwab is one of the original discount brokerage firms, and over the last few years they've been kind of whittling down the cost, the commission to buy or sell a stock, or also an exchange traded fund ETF. So they've gone from $50 to trade to $25 a trade to 10 to 5 to 0. So it's a win for investors, particularly I think of smaller accounts where a $50 buy or sell kind of nicks away at your profit. So it's a good thing.
Those are the pros, though.
Yeah.
Sometimes everything has another side to it. Are there any cons with this?
There always is, right? So one of the concerns is that with no trade friction, with no commission friction on buying and selling, for example, a stock, that people will trade more. And short-term traders tend to have a pretty dismal track record when it comes to picking when to buy and when to sell, or taking concentrated positions and not staying diversified.
Now, how is this going to end up impacting the brokerage industry overall?
Well, that's a great question. When you consider some of the other discount brokerage firms like TD Ameritrade, one of Schwab's big competitors, within hours they matched the same offer. Over the last few years, we've seen big investment companies like Fidelity and Vanguard start to eliminate fees on certain services and products because we as consumers are demanding, lower, cheaper products.
Yeah, nothing like a little competition to kind of make it interesting, right?
Sharpen the pencil, as my father used to say.
Well, thanks, Paul. Let's talk a little bit now about our fast market fact. What do you have for us today?
Well, we're talking about both sides, the impact on the brokerage industry and how this is benefiting consumers. But what about stock investors that buy stock of brokerage companies?
Okay.
Think about this. About a third of TD Ameritrade's profits or revenues and profits comes from trading commissions. Schwab's, I think, is less than 5 or 10%, but they've still been feeling some pressure, laid off 600 people this past summer. So the stocks of these companies were down last week. If you invested in TD Ameritrade, your stock's down about 26% this week. Schwab, again, not feeling the commission change that much as a company, was down about 10%.
So really, it depends on which side of it you're on. It's going to affect you differently in all different aspects of it. Well, Paul, we always love sending our questions to you that our viewers have. Where can we email you at?
Yeah, send any question to me at paul@assetplanningcorp.com.